Good morning from Los Angeles. How is everybody doing? Welcome to Power Hour, Friday edition. It's going to be a good one today. As usual, I will have topics for the first hour, go through my watch list, what has taken place this week. Certainly was a busy week with the Fed announcing the CPI on Wednesday, what the markets have done. I'll go through a bunch of charts, talk to you guys about what took place and what I'm thinking is going to happen in the coming weeks. Share some, as I said, my watch list, what stocks I'm watching, what should be done. And the other thing is, again, this is not financial advice or trading advice, it's education information. And then I'll answer some of your questions. And so please hold your questions to the end. It will be an interesting hour to say the least. Um, yeah, a lot of the meme boys, they tried to do a comeback on GameStop, AMC, Beyond Meat, heavily shorted stocks. They sure took a run. And also, I will finish with my weekly small Robinhood account results. I had to pay attention to my actual big trading account today as opposed to the small account, but I'll share the results with that as usual because this channel is total transparency, right? Winners, losers, whatever it is. And another major announcement. So please share. I mean, I need the subscribers, obviously, but I think we've done great work with Chris on this channel as him being my YouTube manager. He's directing and guiding me the right way. But I have a major announcement. So the major announcement is I'm going to start interviewing Wall Street OGs, and I'm talking OGs, and it's going to be a surprise for the first one. Next one is this one is coming up. And yeah, Ivan, we'll talk about that. Uh, the it's going to be called the Insiders. It's going to be one-on-one interviews with OGs of Wall Street, the people I know, I've met in my journey of 30 years. I am definitely sure you guys will enjoy it. It's going to be like a fireside chat, but who better to learn than these experienced, amazing people who I've met the past 30 years. Because YouTube is full of content creators, bunch of young guys. It may not be my demographic, which is fine. But I think learning from these gentlemen and ladies is going to be amazing. And we're going to post those interviews on the channel as well. So share the channel, share the interviews, share the Power Hour, help us grow the channel. So with that said, I'm going to go into the topics. So the first topic is going to be something that I've talked about in the past. And it's, again, I'm going to talk about it today and put up some stats, right? And why do people keep doing it? Well, the first topic is going to be day trading or traders in general. Doesn't have to be day trading, right? 90%, I mean, those are the stats, and here they are. 90% of day traders somehow manage to lose money. And why? I don't know. What I do know is that, though, it's definitely something that a lot of people start doing without any education, without any fundamentals, and without any groundwork, right? I mean, Chris said this on a previous Power Hour. This is like building a house. If your foundation is not good, your rates, your chance of succeeding is very low to start with, and without that, it's extremely low. So this is an article that I found actually from April 29th of this year, pretty recent. What percentage of day traders make money? Statistics 2024. Day trading is the buying and selling of stocks, forex, options, all kinds of asset classes, right? Day traders choose their position before market closes and reap the rewards, supposedly. It's a high risk and high rewards venture, 100% agree. Around 1 to 20% of traders in general, doesn't have to be day traders, any kind of traders, earn a profitable margin at the end of the day. The low success rate often discourages the newbies to learn new ways from online courses or TV. I don't know about online courses. If I had the magic bullet, why would I sell that online as an online course, right? I'd rather keep trading and make millions of dollars than teach somebody else what to do it, because it doesn't exist. It happens in real estate too. You have all these courses. They go, oh, look at this, look at that. I'm like, I don't know. So here's the statistics. Day trading stats 2024. Around 80% of traders quit within a couple of years. Yeah, because they're broke. They're in the poorhouse. They lost all their bank. They lost their account. They blew, it's probably not one, but through multiple small or mid-sized or large accounts. Day traders have a mindset to sell the winners at a 50% higher rate. Absolutely, which is absolutely incorrect, right? What do we say? For the past I don't know how many weeks, 4 weeks, 3, 4 weeks, we've been doing power hour. Keep your winners running, right? And cut your losses short. That's called risk management. But unfortunately, when money gets involved, emotions get involved, right? And people cannot control that. They think, they do the opposite. They take small gains and become bag holders on stocks that they fall in love with for one reason or another. I mean, nobody knows what a stock is going to do. You just got to read the tea leaves and go with the flow. So only 1% of day traders make a profit. That's it may be probably low. Maybe let's go with 5%. Most day traders increase the amount of trading and take more shots. Absolutely, that's called revenge trading. You don't want to do that. If you mishit a few times, if you spent your bullets, just turn the computer off or whatever your platform you're trading off and go away for the day. Analyze what you did at the end of the day and then come back. This is one of the parts that goes into education. Many urban people, like it happened during the pandemic, government gave everybody money. What they do, they open Robinhood accounts and swing options. And initially they made money, but then how did that, end up? And how did also this week's meme boys end up? They all ended up in the poorhouse. Most urban people with a poor financial background invest in lottery type stocks. Absolutely. Penny stocks are there winners? Yeah, here and there. The problem is not to make it. The problem is to keep it. And unfortunately, it's like a gambling mentality, and they don't keep the gains and they don't go away. This goes into definitely why you should not be day trading. Uh, you know, my thing is I'm not against trading or day trading. Obviously, I do it myself, right? The point is, if 90% are losing, why people keep coming, right? I mean, it's a get rich quick thing, our minds, we all have the gambling gene, right? And so my Jason, I'm going to answer your questions if you hang out. My mindset is that trading is something viable, right? You can make them, can you make a living doing it? Very few people can for long periods of time, like myself. So I compare day trading to horse racing, right? I've called them before. I called them what? Jockeys, stock jockeys, right? Stock jockeys. Okay, so we all have been to the horse races ourselves, right? There are 9 races on each card. I've been to Santa Anita, which is close to LA, many, many times, right? So the same jockeys get on and off horses all day long throughout the card, right? How many races do they win? Depends on the horse, obviously. Depends on tactics. Depends how the horse feels that day. Depends on how the jockey feels that day. Depends on the strategy that the trainer gave the jockey. If the jockey was able to implement that strategy, during the horse race. And for day traders, which is really short term, 5, 10 minutes, maybe 20 minutes max, it is exactly like a horse race, right? So they're like jockeys. They get on and off horses constantly. And what is the success rate of a jockey at the track? Not too high. I mean, I've never met a jockey that has, gotten on a horse and won every 9, all 9 races, right? So it all depends. There are so many variables in it, but nobody needs to be a stock jockey, right? And another great analogy that I came up with, getting prepared for the show, was that they're like hummingbirds, right? So what do hummingbirds do? I mean, they flap their wings a million times a minute, and all they do is go from flower to flower to flower, suck the nectar out. By the time they go to the next flower, the nectar that they sucked out is already, expanded, right? So to me, that is not my style. Are there people doing this? Of course, I'm sure there are. Are there people going to come back and keep doing it? Yeah, there are, because the 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 rewards could be massive, right? So we have to understand numbers here. If 90%, let's say, of traders or day traders are losing, right? There's a 10% group that's making that money. So if 90% are losing, if you can get into that 10% consistent basis, not just 3 months, 6 months, beginner's luck, any of that stuff, yeah, by all means. So that's what I'm trying to do, right? I'm trying to give you guys the fundamentals to be able to do this as a maybe full-time income, as a full-time gig, or as a part-time, right? My lifestyle suits this. I have the time to do it. I have the time to pay attention, and I have the experience of 30 years, right? But so there is no reason for me, personally speaking, to be a stock jockey or a hummingbird. The reason is I pick 10 flowers and I keep going to those same 10 flowers every week. I have an idea of how they're going to behave, especially on the horse races. I know how my horse is going to behave. I have my risks set up, right? And am I going to win every race? Absolutely not. And by the way, I'm going to share at the end of the month how my big account did, like I did last month. I'm going to share the numbers once a month at the end of the month with you all. Again, full transparency. There will be drawdowns, there'll be ups and downs, but ultimately, I think it's going to be a good year for me. So yeah, please, if you have any comments, opinions about this, we're gonna, I'm sure, put this video out on its own as an individual video. You know, chime in, right? Are you a hummingbird? Are you a jockey? Or are you trying to build long-term wealth for yourself? This is also happening in altcoins, right? Bitcoin and Bitcoin separate story, which I'm going to talk about next in the next subject. But this is not my style. If this is what the style that suits you, and you get the adrenaline rush, you get the endorphins, you get the satisfaction out of getting in and out of things nonstop, like a hummingbird, going from flower to flower to flower. Well, this didn't work. There's no nectar on this one. Let me go to the next one. I'm like, why? Right? Their success rate is not going to be that high. Specifically, when I told you guys that a lot of people do the opposite what they should be doing, which is let their winners run and keep the losses short. Unfortunately, it's an emotional thing, right? We all have losers. We know that, and no need to be a bag holder. So don't go from flower to flower. And please, yeah, you can get on 9 different horses in a single day, but then your chances of winning is pretty low. And especially if that win doesn't produce enough results for you as far as, let's say, dollars are concerned, well, you're going to lose the other 8 races, right? There's no guarantees in life, and especially there's no guarantees in trading. So, with that said, to each their own. My recommendation: I'm a swing trader. I'm a position trader. I do day trading very, very infrequently. And then do I do it? Absolutely. Yeah. If I see an opportunity, absolutely, I'm going to jump on it. And just like this week, GameStop and AMC and Beyond Meat and a lot of the heavily shorted stocks, people just jumped on it and made a ton of money. Did I make money? I'll explain that when I share my screen with you guys. Yeah, I made a few bucks by shorting volatility on the options, but selling premium. But we'll talk about that later. So the next subject that I'm going to talk about is going to be this. I talked about Bitcoin. Actually, that's the top viewed video on the channel at the moment. And we did a video called Michael Saylor, the guru of Bitcoin. Is he a gambler or is he a genius? Well, at the end of the video, if you all watch that, I claimed him to be a genius. I think he is. I think he's onto something that a lot of people are agreeing with, and I'm certainly agreeing with it. And then I will share what MicroStrategy did. In fact, last week I said I'm buying the July, August 3,000 calls, and they've handsomely rewarded that decision, obviously. This is Elon Musk, which is another genius in his own way, right? A lot of people like him, a lot of people dislike him, but I think that he's a mad genius. I mean, look what he's been able to accomplish with Tesla, with SpaceX, with Boring Company. And I mean, it's endless. I don't know when this guy sleeps, but all kudos to him, right? So on this one, Elon is talking about the Fed. Well, I did rant about on a video this week about the Fed and what you guys. I'm going to do a lot more of that. What I think they're doing to this country, what kind of injustice they're doing to the American people with their monetary and fiscal, well, monetary policy, obviously, that's connected to the fiscal policy that we have all going in Washington, right? I mean, these politicians, right? They haven't seen a dollar they don't like to spend. And whose dollar is that? It's not their dollar, it's your dollar. And in order to keep spending, we have to keep printing. Well, they don't actually print anymore. They add zeros to the ledger, which what the Federal Reserve Jay Powell said actually on a 60-minute interview, which you all can find on the internet. So going back to this topic, analysts urge Bitcoin, gold, silver as a buy as Elon Musk critiques Fed's money printing. Hell yeah. Elon Musk likens Fed's money policy to monopolies, endless bank funds. Absolutely 100% agree. That's what we do, right? In monopoly, the bank never will go bankrupt, ever. Okay. And so basically, at the moment, okay, just because we are the world's chosen currency, leading currency, and it's been like that for a long, long time. And we just are able to print. And I look at it as us, the US, a much bigger version of Greece. Okay. Can Greece keep printing money or create more drachmas, which is their currency? No. We are probably one of the top or one of the 2 or 3 countries on the planet that our system is set up to print money nonstop, keep inflating, keep adding to the money supply, right? And where does that money go? Well, it gets spent, and then it goes back into the 34, close to getting $35 trillion in national debt, right? Well, I agree with Elon Musk, 1,000,000%, right? Elon Musk he tweeted it, likening the ability of the Federal Reserve to create money to the rules of monopoly game has initiated quite a discussion. Yeah, let's talk about it. According to the monopoly rule, in case the bank runs out of cash, players can use slips of paper to continue the transactions, thus creating a sense of limitless ability to generate money. And that's what the Fed does. Limitless, endless money. And what does that create? Well, that creates inflation that's hurting all of our pocketbooks. And because the simple explanation of inflation, which I'm going to talk about on the next topic, is what? Too much money chasing too few goods. And that's exactly what has happened to housing. That's exactly what has happened to everything we buy on a daily basis. Well, there we go. So this analogy points to the fears of Fed monetary policy, of course, particularly against the backdrop of persisting economic problems. I agree. The Federal Reserve has employed quantitative easing, which are QE, and now, since inflation is out of control, they're going to something to QT, which is called quantitative tightening. They're not even tightening; they're pumping money still, in which it acquires securities to pump money into the economy. That's QE, right? They acquire securities, mortgage-backed bonds, their own treasuries from willing sellers to add money to the economy. That's called the money supply. And now that they said they're going to do QT, they're going to lower the balance sheet to combat inflation by also raising interest rates from 0 to 5%. Is it working? Does it look like it's working? Well, the inflation report came out, the markets liked it. Why? I mean, we're running, this is simply put, if you had $100, okay, you're losing 7% of that $100 each year in 12 years. 12 years ago, if you had $100, today it's worthless. Okay. So all of this goes back to why I think Bitcoin is with a finite amount of 21 million total circulation, is a valid, strategy to have everybody's 10% of their wealth at least in Bitcoin. I mean, now that the threat of the government basically completely getting rid of Bitcoin, now that BlackRock is in it and Fidelity is in it and all these massive companies, and we see what's happening to these ETFs, billions and billions of dollars are pouring into these. I think the government is scared that something will happen, is out of the way, and we're seeing what happened to Bitcoin this week, right? 61,000 to now 67,000, and probably on a breakout, it'll be 110 pretty shortly. And here's the tweet. I mean, the guy talks it the way he sees it. Rising U.S. debt, which I talked about on the last Power Hour, and we put a video out, is not a good thing. It's just not. The U.S. budget deficit reached 1.7 trillion in fiscal 2023. How's that happen, people? Okay, we have GDP, okay, gross domestic product, and people make money, supposedly, right? We pay taxes, and that goes to the government. Well, the difference between the tax receipts, and this is what at stock market, by the way, and most of the tax receipts come from rich people selling their stocks, like Jeff Bezos sold $5 billion worth of stock. He has to pay long-term capital gains on it. That's where the money is coming from. It's not coming from your W-2 paycheck, you think, as much as it is. So we create a budget. The budget is what? Let's say $4 trillion this year. Well, the income, the tax receipts are only 2.3 trillion. Well, that's how you create a 1.7 trillion budget deficit, okay? And it's projected to hit 2.6 trillion by 2034. So every year, and that's how we got up to $34 trillion national debt now. And the problem with that is our GDP is not accelerating, right? But the debt is. So the debt held by the public is on track to reach a record 106% of GDP by 2028. That's around the corner, people. That's 4 years from now. So my opinion, Fed, my suggestion, stop printing, stop hurting the average American by creating inflation, and end this madness. Do I agree with Elon Musk that the Fed is like, playing Monopoly? They will never go bankrupt because they have the ability to add zeros to their ledger or print money? Absolutely. You guys start, can you do this with your household budget? Okay. You have, let's say, 4,000 a month budget, right? To pay your rent and to pay your car note, insurance, eat food, go out, buy clothes, whatever. Well, your spending is $5,000 a month. Where are you going to get that $1,000, right? Well, as a household budget, right, we can't do that. We have to have a budget, and we have to stick to that budget. But somehow the U.S. government doesn't see that as being a problem, right? Because they can print and issue more debt, and that basically is IOU, right? They create money out of thin air and spend it because their budget is upside down. How is it that I'm supposed to stick to my budget, but the U.S. government doesn't have to? And the other thing is, if I did that, I'll be broke. I'll be in the poorhouse. I'll be bankrupt. Okay? So my point is, have a budget, stick to your budget, because we cannot add zeros to our bank accounts. We just can't, right? So that's the second topic. And the third topic is going to be actually about inflation. We had, let's see, we had news this week about inflation. This is the latest from Fred. I talked about it actually on a video we put out this morning. How do I prep every morning, for my trading? I go to the website and I look at the economic data. As I said, I'm a techno fundamentalist. I watch technicals, but I also absolutely have to pay attention to fundamentals of what's happening. Fred stands for Federal Reserve Economic Data. You guys can do this on their website. This is the latest CPI. Well, look at this trend going back to 1940s, right? I mean, this is actually this would be a good stock chart. But this is a trend you don't want, okay? And all the gray bars, by the way, that you guys can see on the chart is where the economic slowdowns hit or recessions hit, okay? So my point is, this is not a good chart when it comes to inflation. It's going from the lower left to the upper right. If this was a stock, it would be amazing. So CPI came out on Wednesday. It was lower than expected because we play the expectation game on Wall Street, right? Just like with earnings, we play that game. The expectation is this. It comes lower, market rallies. Expectations is something I will talk about in the future on Power Hour or different videos. This is the consumer price index for all urban consumers, all items in US average, all items, right? But then they have different versions of this. They have core CPI, which excludes food and energy. How many of us don't buy gas and eat food? I'm not sure. They have many ways, right? They can spin it many ways they like. Inflation is hurting people. That's all I know. It's hurting my household, my budget. Everything I have paid for over the last 3, 4 years has doubled, right? And has my income doubled? Absolutely not, right? So adjusted to inflation in the United States, incomes are down. And who's doing is that? Is the last topic. Monopoly money. We keep printing and we keep spending. And this is what the items are in the inflation. Expenditure items are classified in the CPI into more than 200 categories. This is some of the major ones. Food and beverage, obviously, housing, apparel, transportation, medical care, recreation, education, and communication, other goods and services. So in those five, six things that are in the inflation report, let's take a look at it. Food and beverage. Has your food and beverage gone up when you go to the supermarket or Costco? Are you able to buy the same amount of goods with $100 you did 5 years ago? No. Housing. Well, we all know what has happened to housing and rents, up massively. Apparel, that may be actually the only thing that's the saving grace, right? Maybe clothing has not gone up as much. Transportation, has it gone up? Well, take an Uber or a Lyft these days. It has doubled since 2019. Medical care. Hello. Have your bills gone up when you go to the hospital, or God forbid you go to the doctor? Have your copay has gone up? Absolutely. Medical care going through the roof. Recreation. Well, 10 years ago, if you went to Hawaii for a week and you go today, what's the difference? 100% up? Yeah. Education and communication. Okay. Have your phone bills by AT&T or Verizon have gone up? Cell phone bills? Absolutely. How about your cable bills? Have I gone up? Absolutely. Education. Let me not start education because I ranted last week about that. I mean, what does a private college like USC or Stanford cost these days to a student? Hundreds of thousands of dollars. Even in the CSU system or UC system, prices have doubled or tripled over the last 5 years. I mean, food, energy, right? Has gas gone up in the U.S., right? So these are the little things that are in the CPI report, and this is the inflation. You guys can see inflation, consumer prices is the blue bar, and I mean, it's pretty clear, right? We had about 2% inflation according to the Fed, of course, since from let's say 90 all the way to 2024. That's 35 years, right? And then we kept printing money. We kept, inflating. And now the cat's out of the bag. And the last one was during COVID, obviously. We printed $5 trillion with a T, okay, to save the economy because nobody was spending money. As I said in a previous video, our economy went from manufacturing base to consumer spending base. 75% of GDP is consumer spending in this country. And all we do is borrow and spend. That's the only way the consumer is going. But spending crashed, right, during the pandemic, and savings rates went up because government created fiscal policies that put actual cash in people's pockets because they ended up either getting laid off or were sitting at home. Well, that created inflation. Now look what has happened from 1960s to 1990s, 1980s, late 1980s to inflation. It's gone up as high as 12.5%. And inflation, by the way, I talked about this, is a cancer. Okay, you have to kill every single cell. If you cannot, by chemo, which is raising interest rates, if you cannot kill every single cell, inflation will stick around. It's a pesky, pesky, pesky rat. Okay, and that's what the Fed is doing now, raising rates. lowering and lowering the balance sheet in order to fight inflation. And their goal is take it back to what it was for 35 years, which is about 2.5%. That's their target. Well, until they do, they're going to keep the interest rates high. All your credit card, interest rates, car loans, everything you guys have noticed, you're paying more interest on those things. And once the inflation trend starts, it's not an easy thing to get rid of it. Okay. It's in the system because of the printing, because of all this money slushing into the economy. You cannot, it's like a washing machine. You cannot even in the halfway through the washing cycle, open the door and empty the water. You just can't do that because the scale of it is so massive, right? So, yeah, is inflation going to stick around? It looks like it to me. And then lastly, this is my small Robinhood account. Again, like I said, this week I had to pay attention to my big trading account because there were some good opportunities to make some money. But I started this account 4 weeks ago with $1,000 exactly. The first week 1189. Next week it went up to 2200, which we didn't put up. We don't need to. Last week it was 231010, and this week I am at 2395.97. So gain about 60, $70, 80, $85 actually, but 3.5%, 4%. Look, man, I'll take 3.5%, 4% every single week on this account. I know what I'm going. To be honest with you guys, this has become a challenge for me. It really has. What's the challenge? I really have to be mindful not to blow it. Number two, could I have traded GameStop and AMC and swung for the fences on this? Yeah, I could have. But again, like I said, I'm not a jockey. I'm not a hummingbird. This is a marathon for me. It's not a sprint. I think the return for 4 weeks from 1,000 to 2,400 is phenomenal. And will I put the gas on? Now that actually all the economic news is out, and I have a month to relax for the next CPI because that's moving things around a lot. I'll put some more gas on this and pay more attention and slow down my actual trading account and keep the gains on that account. So, with all that said, those are the topics. Let me add my screen to the stage, and let's quickly go through a couple of questions before I get into my watch list. Hi, Sergio. What's going on with AMC and GME? Well, AMC and GME both had a crazy week, right? The meme boys are back. Roaring Kitty came back. We did a popular video on that. He said, I'm watching GME again. Of course, stock goes from, 15 to 55 in a matter of 2 days. Hey, if you got jumped on it, you made a ton of money. But then, today's stock is back to 21, down another $7, and AMC went from $3 to $12 within the same day. Actually, it went down to 6. Now it's down to 4. Look, these things move around. They're both garbage companies. AMC is actually literally bankrupt company. Okay. Was there an opportunity to make money with it? Yeah. What did I do? We talked about options. I sold premium, because implied volatilities was pumped up to 500% on these things. And yeah, I mean, there's money to be made, but you have to know how to make it. But if you're just going to buy options at 500% implied volatility, you're going to hit the wall. Okay. And a lot of the meme boys are crying today because they all bought those options by the hundreds of thousands. We talked about that, on a video as well. Something called a gamma squeeze, right? Hundreds of thousands of options are bought. What does have to happen? The underlying asset has to get purchased by the market makers because they don't want to be naked short. And that's what happened. That's the technical part. But now all the meme boys are back in their homes crying. Another question, there was Jason saying that statistics can be twisted. No, these statistics are not twisted. If you know any history on Wall Street, going back, I don't know how many years you've been studying this. This is not about statistics. I've been doing this for 30 years. I don't know how long you've been doing it, but trust me, 90% of traders lose money. And if your experience is any better, maybe I'll put you on the insiders and do an interview with you to share your success. out of 80% that quit, that will include the winners. Yeah, absolutely. Absolutely. If you made that money and you're in Costa Rica, Jason, I would love, love, love to interview you as a successful trader who kept the money and bettered his or her life and now is reaping the rewards. So shoot me an email, or leave your email on the comments on any of the videos. I will definitely contact you. Can you give us some tips on developing more confidence in trading when dealing with losses? Absolutely. The only way, right, is to do this is, look, your emotional way you handle losses are the most important thing in trading, any kind of trading, right? And you need to be able to cut your losses short. You have to set the parameters from the get-go. You bought something at 10, what's your risk limit? 7%, stop at 930, irregardless of what happens. You need to stop that. If you don't stop that, you're going to keep bleeding cash. And what's going to happen is that in every business, if you're a brain surgeon, you need confidence. You don't want to cut, or if you're let's say if you're a police department bomb squad, I mean, how much pressure is that to cut the right wire, right? Well, you need to know how to cut the wire. And that comes with obviously years of experience, education, right? The best tools that you can give yourself. But there are no guarantees. We don't know what the market's going to do. Pick very few things. Keep it simple, stupid, number one, to start trading. But then if, I shut down my trading for months at a time? Absolutely, because I want to gain my confidence back. Once you lose your confidence, like in sports, right? It's a really, really difficult thing to do to gain it back. And you need that confidence to be a successful trader, but you also need to be the best risk manager you can be. That's the answer for that. Do you believe the stock market just being propped up because of the election? Election years are always good for the stock market because the politicians will not do any harm for the market to go down or crash or tank, because they're not going to get the votes. Cyclically, historically, election years have been the best years, of the markets, right? I mean, like the Federal Reserve with high inflation already um, is thinking already cutting rates, right? Why? I mean, we already have roaring inflation. Why cut rates, right? Well, it's an election year now. The Fed can keep saying that, oh, we don't care about politics. We're going to do what's best for the American consumer or the American public. Fed, you're not doing any of that, right? By doing what you did is what you're hurting. And now double whammy on the American consumer, American public. One, you created inflation. Everything they're buying has doubled. Now you raise rates. All their credit card loans, all their mortgages on adjustables, everything has gone up on these people. So that's like a double taxation. Inflation is an extra tax, and higher interest rates is an extra tax. So did you do option spread? No, I did not do option spreads. Option spreads are fine. You could have done that. Let's say you could have done a calendar spread or a diagonal spread. But no, I actually flat out naked shorted some calls, because they pumped the volatility up so much that even if the stock went up, the options were not going to go up anymore. I sold them and I bought them back. That's the way I made money. I sold volatility. If I join Robinhood, who is the best to start investing with first? You mean as far as an individual stock? I'm going to talk about my stock list. You can take a note of those stocks that I'm looking into trading. This week I did, and next week as well, because the trends have been established. So with that said, let's go to my screen. Let's go real quickly through my charts, right? So simple setup. This is the S&P 500. I'll answer the questions at the end, last 5-10 minutes, okay? I want to go through this quickly. This is the S&P 500, right? What did I say? Trend is your friend, correct? Is there an established uptrend? Absolutely, right? And to the upper right-hand corner where my cursor is at, that was the old high where this red line is drawn at, right? Remember, we talked about technical analysis. We talked about support lines. Well, guess what? S&P 500 went from 525 to about 495, which is about 6% correction, which happens on every bull market. 5 to 6 to 7% corrections are absolutely common. It came down to a point that it came to support. I had these lines drawn already, and if it had broken that, this would have been the next line of support. You have to draw these, so then you have a game plan set up. And the third line of support, if it kept breaking, would have been this line, right? I already had it. Well, there you go. This was the first line of support. That shows the strength of the market. If the market is weak, you will usually go to the second or third line of support. On this one, it just stopped, dead stop on the first line of support. I had drawn this line when the market rolled over. This was the old high, all-time high resistance, right? Well, what it on Wednesday, which is this bar right here, well, inflation report came out, and boom, sure we are. We're to the races. New all-time high. You don't question the market. Yes, my bias is negative, but you have to go with the trend. The trend is your friend, and the trend is good. This is the triple Qs, same story. Uptrend, massive uptrend. It's been going on for a while. This was the old high. We broke right through it. Now there may be a point that it pulls back a little bit to the break where it broke out of, and then continue the uptrend. I just trade what I'm given. I'm not going to guess. I'm not going to, take a shot at things that are not there. I see what I see. And then on this one, I had drawn these lines already, which you guys have seen in the past. This was the first support, line of support, the old high that had broken through. It came right back down to that and stopped. And if they had broken that, this would have been my second line of support, right? It didn't even come close. And, markets are strong. There's nothing to ifs and buts about it. And this is the 10-year T-note inverse, index. There is something very interesting happening here, right? These are basically interest rates. So if this is going down, the chart is going down, that means interest rates are going up. This is the inverse. It's called TLT. You guys can trade that actually. iShares Barkley 20+ year Treasury index. So there's a clear channel here. You guys see this? Now, I hope you guys got the books and reading about technical analysis. You guys got to start drawing some lines and looking at some charts. Here's a clear channel. One top, reject, one top, reject, top, reject, top, reject, top, reject. We came right to the bottom of it yesterday, where my cursor is at, and then we got rejected. Is it going to go back to the bottom of the channel? I don't know, but if it does, the market is not going to keep making new highs. I can assure you that, right? And the last push that came with the market, as you guys can see this, interest rates went down, and what happens to the market? Market will goes up. There is a massive correlation between interest rates and the markets. Let's go through what I'm watching, what I watched last week, which are the same stocks, by the way. I don't change much and then I know you guys are saying, well, Serge, you find these stocks. How am I going to find these stocks? I'm going to start talking about that. The tools of the trade. Well, I talked about Mr. Genius, second genius. Elon Musk is the first one, and Michael Saylor, the second one. This is MicroStrategy. This is the Bitcoin surrogate. This moves up and down with Bitcoin to the penny. If you guys looked at your trading books, you look at my cursor, there is the left shoulder, there is the head, and there is the right shoulder with the neckline. I had these lines drawn already. That was the first resistance line. What did it do? When the inflation report was announced, Bitcoin took off. It's at 67,000 now. It broke out. Now today, we went to the second resistance line. And so far, we held it, right? I mean, I don't see anything wrong with the stock. This thing is a Bitcoin surrogate. You have to be a little bit careful with this. If you want to trade Bitcoin, you can trade the ETF with much lower cost. The spreads are massive on the stock, so there may be a lot of slippage. But as a Bitcoin surrogate, this is the largest corporate holder of Bitcoin in the universe of 215,000 Bitcoin that they have purchased by literally mortgaging the company. Well, he's right so far. And this is the third line of resistance. And the all-time high at 2,000 and change is the fourth line of resistance. The higher Bitcoin goes, this is going to go higher. Okay, this is the turbocharged version of Bitcoin, basically. The second chart I'm going to talk about is Wayfair. I talked about this last week. Stock is on an uptrend. Look at my cursor on the right. It went up, it broke out on massive volume. It broke above its 50-day moving average, and it broke above its 20-day moving average and its 200-day moving average. These are the three lines that you see here. Once stocks break out, they have a tendency of pulling back on low volume. Look at the lower right-hand cursor that I'm moving. Well, I'm going to be a buyer of the stock right about 65 with a risk at the 50-day moving average close, which is going to be right about 62. So if I'm a buyer at 65, 66, and my bailout is at 62, I'm risking 4 points to make at least 10 to 15. Which I'm seeing the stock going back to 91, which is the resistance line that I already have drawn. There's nothing more, nothing less to say. Another one, this is Marathon Digital. This company is also in the Bitcoin business, but they're one of the top miners of Bitcoin, right? And it's a pretty volatile stock, so you have to be careful. But then I have drawn my line as far as resistance at 24.81. But there is something interesting happening to this stock, right? Again, from your technical books, do you guys see this channel, or it's like a flag, right? Do you see this that I'm highlighting? Well, you guys should have these lines drawn. So whichever one this breaks out or down, you have to act. Right now, it's in the middle of nowhere. It's a no man's land. I'm watching it. Another one is Coinbase. Clear chart pattern here. Here are the tops. I'm highlighting it, and here are the bottoms connected. This is looking like a pennant to me. I'm not doing anything. Long-term pennant or an ascent or a ascending triangle. Well, I just gotta wait. What is happening to the stock is squeezing into the right side of this triangle. Whichever way this breaks out is going to go multiple percentages and points. So these are the things you guys you need to start watching now. Here's another one, Root Insurance, super volatile. I was long the stock at 50, sold it into the mid 60s. Earnings came out, went to 80. You guys talk about support and resistance, right? I had this line drawn way before it got there. What happened though? It got there and it got rejected. You think that's a miracle? Yeah, some people say technicals are voodoo stuff. It doesn't work. Well, why did it stop there? Right? It was the old high. It stopped there, got rejected. It goes from 85 to 55. What does it pull back down to, people? Remember, we talked about the 50-day moving average? Guess what? You think it's a miracle? It comes down to the yellow line and it stops right there. It could have blown right through. Now, it's just kind of going sideways and taking its time, right? These are the things that you need to start using as your tools to pull the trigger. Is there a trigger to pull here? No. But most of the time, don't be the jockey, right? Could I have traded this from 85 to 55 and back to 65? Yeah, I don't want to do it. I want a much clearer indicator and a longer term move like this one it did. Look at my cursor. Stock goes from 10 to 85 in a matter of months. This is where I want to be in. I don't want to be in the zigzag here, right? I don't want to get chopped. This is Piedmont Lithium. That I don't own the stock. I'm watching it. It's on my watch list. I have my resistance line drawn and I have my support line drawn. It is going between 11 and 17, 18. If it breaks the resistance line, it's going to get up to the 25, which is the 200-day moving average. And this is the next resistance line. Risk reward is shaping up really well on this. It's basing, right? I'm just going to wait. You guys are going to say, Serge, you're all waiting. I'm like, yeah, that's the patience part, the 3 Ps. Remember, patience, position, and planning. Have your plan ready. This is your plan. This is them. This, I'm long the stock. I traded it. I told you guys this about weeks ago, actually. Stock broke out, high volume, broke above the 50-day, broke above the 200-day, which is the light blue line, pulled back to it, and then took off. Sky's the limit now. Now, on any pullback, I will buy the stock. On any pullback until proven otherwise. Okay? And the next one is going to be SMCI, Super Microcomputer. That's like it moves with NVIDIA, actually. Well, there you go. There was a clear downtrend established. Boom, huge breakout. Now pulling back a little bit. I will buy the stock on any pullback to 860, 870 levels. And that's it. There is nothing more. And I'll draw this line for you guys as well, so you guys can understand how I do these things. And here it is. There is that triangle that it broke out of. I mean, it just looks like Coinbase, right? Not too difficult, people. There is Carvana that I'm watching. Look at this. There's another uptrend. I don't know what to say. Now the stock went up massively on earnings. Now what is it doing? It's consolidating. That's what stocks do. They go sideways after they break out. Now, do I need to be in it? No, but on the next breakout, I will definitely be participating on the next leg up or next leg down. And here's my two of my favorites. Remember, I told you about this Alibaba when 2 weeks ago, 2.5 weeks ago. It had broken out, okay, went above the 50-day moving average right here, right about 74, broke the downtrend line that goes back, I don't know, to December of 2023, right? Clear downtrend, breakout at the same time, go above the 50-day, 74. Stock today is at 89. How many of you participated in this? I certainly am. I'm still long the stock, and I will buy on any pullback. The trend is definitely established now. Next one is going to be Sleep Number. Sleep Number, I don't have a position, but there's a cup and a handle that's developing here, and 200-day. If the 200-day breaks, if the stock goes above 17-ish, I'm a buyer of the stock, but still watching it. I added, and then Pinduoduo, we talked about this, up another couple of points. There was a bull flag here I drew. There was another bull flag here that it broke out of. Now it's going into resistance. Let me draw the resistance line for you guys, and then if I owned it, I own a small position of it. I will take a profit at this high, which is above it now. Right here, draw resistance. Well, it has to clear this one out, or trying anyway. So right here, if you're going to take profits, you need to take profits. And I added a stock this week to my watch list called Marvell, which is chip company. And I added one more to my list today, which is AMD, which most of you have heard, Advanced Micro Devices. And here it is. Now, the stock is just breaking above the 50-day moving average on really good volume, right? It's been in a clear downtrend, and there is a mini inverted head and shoulders right here. There is the left head, there's the right head. Earnings are out of the way. There is the right shoulder, and the neckline was right here, which was the resistance line. It's broken out now. Now I will be buying AMD, on any pullback. And here's the risk reward we're going to talk about, right? Okay. So if I'm buying AMD right here at 163, 69, 66, whatever, okay? Where is my risk? Well, here's my risk, okay? I'm going to draw that line, actually, my stop out or my buy point, which is going to be right here, the green line. So 163 is my, right around here, 60 to 63 is my buy point. My stop out is at 150. That's 10 points. 10 points on 160 is about 6%. That's my risk. And if it happens, I don't care if this is my mother. I will sell it, period. And that's how you deal with these situations. So, yeah, that's it. Let's see if you have any questions. I'll answer those, and we'll finish another successful session. AGI. What's AGI? I don't know what that is. What is an iron cross? Iron cross is, there are many death crosses. Okay, the death crosses are, 20-day, depending on your time frame. 20-day moving, crossing to the downside or upside for a buy or a sell signal. 20-day EMA I watch, exponential moving average. But the iron cross, or the death cross that they're going to call it, is that a lot of institutions watch, which is 50-day average crossing the 200-day EMA to the downside or to the upside. Is it a good idea to option against AMC? No, that's too late. Implied volatility is too high. You're not going to make any money. You can write options on it, though. No, not now. You could have done that at 12, but implied volatility was so high, you wouldn't have made money. Could you show the Uber stock and they must? Okay, yeah, absolutely. Let's look at that. What is, okay, AGI? I don't know who that asked you that. What is, okay, I'll answer that last question right here. Chris, we have like 6 more minutes. Let's look at Uber stock. Absolutely. Actually, let's look at Uber and Lyft. How about that? And DoorDash. Okay. All the, actually, Instacart as well. Let's look at all the gig economy stock. This is Uber. Here's Uber. Okay, is there a clear downtrend established now? Absolutely. Is it below its 50-day moving average? Absolutely. I'm not touching Uber. I have my support lines drawn already. Here's my first support line. This is going to get eliminated now. This wasn't the original support line. It's broken now. When it's broken, eliminate it. Here is Uber. Came to the first support line, bounced a little bit. It's rolling over again. I don't like Uber technically. I liked it here. I liked it one day first, actually, released upfront pricing. When they released upfront pricing, actually, I did a couple of consulting calls with hedge funds and sell side analyst firms. I said, buy the crap out of this stock. They go, why? I go, their take rate is going to go through the roof. Well, stock went from, I don't know, 40 uh, to 80. But before then, most of the country was getting upfront fares right about $23. Do you guys see this? Right about here on the, okay, look to the left, please. 2022, right about here, when the stock was about 20, I mean 33, 34, right about April, May, they started really of 2022, they started releasing upfront fares in the country. Well, since then, it has been nothing but a wonderful journey for the executives of Uber and shareholders. Right now, no, not so much. And I will be, there are much better charts than Uber. Lyft, on the other hand, the little tree is doing really well because, look, I mean, yes and no. Stock was like 12, now it's hit 20, now it's meandering about 17. Definitely outperforming Uber, definitely doing better than Uber. But if you guys look at the history of Lyft, Lyft is basically has been dead money for I don't know how many years. It's gone between 10 and 20. But it's definitely looking better than Uber, above its 200-day moving average right here. On a breakout of 20, I can see the stock going to probably 30. But again, there are much better charts. No need to chase these things. And this is DoorDash. Again, IPO came, hit 250, went all the way down to 60. It's in a little uptrend. Last earnings report were not good. And as you guys can see with the gap on my right-hand cursor, it's below the 50-day, below the 20-day. It's probably will test the 200-day. At that point, I may give it a shot. Again, there are so many better stocks out there to follow and trade that this is garbage. I don't want any of those at the moment. There was a time for it, not now. So let's answer some more couple of questions. Sergio, what's your criteria to enter along on a pullback route? Absolutely. If you want to enter on the 50-day pullback. And let's put that up one more time. Let's look at route. Here it is. On the first pullback to the 50-day is your best shot. Okay. So this was the first pullback. In fact, I told you guys, go watch the power hours. I said I'm long route. I bought route between 50 and 53. I even told Chris, he's my witness, if you're not. Did I sell it too early? A little bit too early. I sold it about 65. Right into this resistance right here. I didn't think it would do what it did, but then, stock is shorted heavily. It went all the way to 85, but the same day closed at 70, and then it cracked to 55. The first pullback to 50 is my best criteria. If there is a stock that has been established uptrend like Root, has gone crazy, almost parabolic, the first pullback right here, I'm moving my cursor up and down, is the best way to get into these things because it definitely is going to retest, which it did. The second one, you got to be really careful. The third one, I would definitely not participate. So the first pullback to the 50 EMA, for me, has worked wonders over the years. So I would suggest you do the same. And any other questions? How to use the SMA, EMA? I use EMA. I have very clean charts, as you guys can see. And I talked about this. I have a 20-day EMA, 50-day EMA, and a 200-day EMA. Those are the only things I use. As far as indicators, I use a clean RSI. Once in a while on certain commodities and things, I use, MACD, MACD. But other than that, clean charts. Naked charts are the best charts, people. Okay. So we have a couple more minutes. Ryan says, Caught your first fish. All right, Ryan. Caught my first fish this week. Did my first trade in May actually make? There you go, Ryan. I'm proud of you, buddy. AGI. Oh, is that a stock? Is that why you guys are asking me? Let's take a look. Oh, sorry. AGI. Let's take a look. What is AGI? I don't even know. Let's see. AGI. Oh, Alamos Gold. Is that what you're asking me? Great. All gold stocks are doing well because gold is doing well. This is gold, by the way. GLD is the ETF for gold. Is there an uptrend? Broke out at 1900 right here. Boom. I mean, yeah. Again, thanks to the Fed. This is the reason this is happening to gold, by the way. Devaluing the dollar and keep printing money. I'd be really careful with all the gold stocks. Okay, here, let me draw some lines to finish. Here's the resistance line on gold, actual gold, and I'll look at AGI in a minute. So now it's retesting the old high at 2250. I'd be really careful with gold and everything else if the rates start going back higher because they can't kill inflation. Things are going to pull back. Here's AGI, beautiful uptrend. Let's look back on a couple of years. Yeah, I mean, beautiful uptrend. What is there to say? Well, I mean, right? All-time highs. Looks like it anyway. Yep, definitely all-time highs. So when things get into the stratosphere like this, right, atmosphere, there is no resistance. Remember, supply demand, right? Stock broke above its 50-day average. This is my number one rule. Did it break above its 50-day average right here? One point I'm circling my cursor. It was 12 and a half. Has it stayed above the 50-day moving average all this time? Yes. Has there been noise in between up and down? Yes. Do I really care? No. If you owned it, you're 17, 12 and a half to 17 is 4.5 points. That's about 35, 40%. Thank you very much. I appreciate it. Good money. There are better things to do. Yes. But winner, 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 chicken dinner. I don't know what else to say. Trend is your friend. Don't be a stock jockey, please. Be nice to yourselves. And don't go bankrupt, more importantly. SMA, EMA. SMA is simple moving average. EMA is exponential moving average. Please use EMA as opposed to SMA. More smoothed out. How to apply them? Put them on your chart. Let's start with this. First, put them on your chart, okay? It's a lagging indicator, but it's going to give you some signals. How do you get the signals? If a stock is above its 50-day EMA, you can trade it comfortably. If it's below and you want to buy it, don't be tempted. Don't. Okay? And a small signal that, amongst other things that I watch, if a stock goes above its 50 EMA, buy it that day on a closing basis. If it goes below it 50-day EMA, sell it that day and go short. That's what I do. There are many other things I watch. Let me show you a quick example. Chris, sorry, we're going over, but let's. What do you guys want to do? You guys want to look at AMD that I like again because actually let's look at that. All right. So here's the stock going sideways. I'm highlighting. That's the Bollinger Band. I don't want to highlight that. Okay. Do you guys see this orange line? You guys see this huge bar here that it closed above first time after going sideways? I don't know how long, and there has been a channel established there right here. Actually, I'm going to draw that for you guys too. This is in the past. Whatever happened in the past is not a guarantee of the future, but you have to know how to do these things. Read the tea leaves. Here was the clear downtrend right here, right? It was in a channel like the interest rate. That broke out of there, right? It goes, this is the first day right here, price-wise. And I'll give you the price. The price was 103.62. That it broke above its 50-day average, EMA, right? It went from 103.62 November to March this year to 220. Did it ever break below its 50-day average? No. Now, let's say you did this. Every time something goes up its 50 EMA, you buy it. And every time something goes below its 50 EMA, on a closing basis, you sell it. Let's see where the trigger is going to be. Now, you left some money on the table because you waited for it to cross here, right? Yeah, I mean, you could have taken the profit at 228, but nobody's going to do that. But, keep it simple, stupid style. 103.62 was your buy point. And this is the first day right here. And this big bar is where it closed. And let's look at the close. Let's say you waited all the way to the close. 166.72. 103 to 166. That's 63 points. That's 65%. If you didn't make money, I don't know what to tell you. Then, if you shorted it, you're good. However, let's not go into that yet. I'll talk about shorting next week. Now, last 2 days, right here, is the highlighted orange line is the 50 EMA. It went above its 50 EMA right here, right? Now I'm a buyer. Okay, I bought it. I'm going to hold it. Now, it has to be on a closing basis. Today's stock hasn't closed yet. If it closes below the 50 EMA, don't buy it. But if it's convincingly like this right here, this bar right here, then buy it. Let's start with that. Keep it simple, stupid. How about that? Okay. So with that said, we'll see you guys on Monday. Cool topics to talk to you guys on Monday. And yeah, that's it. I think it was good today, right? So Chris, let's show your pretty face, bro. How you doing, buddy?
What's going on?
Chris is the man, the myth, the legend behind the scenes. He makes me look good every video. So say hi to Chris,
Yeah,
everyone.
and
Oh,
I'm doing it from behind from my car too.
yeah, from your car. Anyway,
Oh,
so
I never mind. I'm at home.
that's it. Have a good trading. Have a good weekend. Have a good trading week coming up. Ryan, I'm proud of you. He caught his first fish. Chris, how about that?
I saw that.
Boom.
Yeah. Was it? And luckily, it wasn't a Swedish fish.
There you go.
Dun,
Anyway,
dun,
thanks. All right, boys and girls, have a good weekend. See you guys on Monday. I know we went a little over. That's it. So have a good one. Be safe. Be healthy, more importantly.
Take that money.